Ladies and gentlemen, welcome back to the channel. I want to give you a rundown of everything that's happening today with AMC stock, all of the data, and then I also want to talk about the data coming out tomorrow morning, which is CPI, that could have a much bigger impact to AMC stock coming tomorrow morning. I want to give you my prediction on what I think is going to happen based on the most likely scenarios. So hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section if you have not done so already. I don't know what the hell you are doing, if you are living under a rock or not. Thank you for doing it, and let's get into it. So, first things first, AMC stock, important to keep this in mind. Keep this in mind for the next couple of weeks. AMC had great earnings. AMC is profitable. Perfect. Awesome. Well, that's not enough in the face of this court proceeding to get the stock to really see a massive rally. It's just not enough as of right now. So we still need to get certain things happen, right? We need to get clarity from the courts. That's number one. That's going to be the biggest driver to AMC stock. We're not getting any news of that nature. We're not getting any insight from Adam Aaron or the AMC management. Nothing is an update today. And if we type in Google search, we're not really getting any news that is worthy to report to you here on the day as well. Now, this article from 2 hours ago from Eddie Pan says AMC stock Q2 results fuel demand for ape conversion approval. Adam Aaron has highlighted the risk of running out of capital by 2024 or 2025, which I think is a weird way to put it, because AMC is now profitable. That means they shouldn't need to raise capital as urgently. So I think some people out there are just wording things a little bit strange, trying to ultimately confuse you. I think that's what they're trying to do, short and distort. They're definitely shorting and trying to distort you, because AMC was profitable. That means last quarter, at least, AMC did not essentially burn through any more additional capital. They were profitable by about $8.6 million. It's not a huge number, but it's enough to support the business, at least from going bankrupt. So I think this is actually better news for the whole conversion proposition. AMC doesn't maybe need to do this as soon as they thought, and bankruptcy might not be a real risk for a little bit longer than maybe we had previously thought. So keep that in mind. The AMC still, that's a very positive catalyst, very positive thing that just happened with AMC that I think will at least support the stock. It's not like we just lost hundreds of millions of dollars again. It's not like we had the worst case scenario. We actually had the best case scenario happen from AMC's earnings. So do keep that in mind. Now, if we talk about the biggest stories as far as the broader markets that happened today, well, definitely it's that the Chinese economy falls into deflation as recovery stumbles. Now, exactly what happened is the consumer price index fell 0.3% year on year in July. You also seen a 4.4% drop in producer prices. Now, this comes after yesterday's data that we got from China was also very negative. The exports and imports are declining dramatically. Now, the sequential decline is worrying, okay? So, back in 2019, we had worse numbers than what we just seen, of exports dropping 14.5%. But what you've seen back in 2019 in February was a drop of about 20.65%. And then you've seen an increase the next month of 14%. And then you were plus or minus. It was really just back and forth a little bit. Well, what you are seeing now is just a continued drop in exports as well as imports. Now, imports are a little bit more volatile, right? They can go up and down for a lot longer. But the exports number, not as much. So this is very bad. Add this with deflation that China is seeing, that is even worse. Now, fun fact, deflation is worse deflation is worse than inflation. Deflation is really, really bad. Deflation is why the Japanese stock market peaked out in the 1980s, 1989, after a very strong multi-year rally, and has never recovered ever since. Right now, you're getting close to recovering, but you're still not all the way where you were about 35 years ago. That's because Japan started to go through deflation, and inflation really stopped. The reason why the Japanese market's doing well now is because now you're getting inflation in Japan. So this might sound kind of weird to a lot of people to say deflation is worse than inflation, because we've been faced with inflation the last 2 years or so now, and the markets have not performed very well. At least they didn't as of until recently. But deflation is much worse. So if China's having these kind of problems, well, we could start to see these kind of problems. Deflation would be welcomed by the Fed, at least to some degree, right? At least initially. But that's not where you want to see your economy going, okay? So that's some of the biggest things that happened today. You're still coming off of the Moody's downgrade of banks, and Moody's really downgraded a lot of banks, cut the ratings on 10 banks, including Bank of New York Mellon, U.S. Bancorp, State Street, Truist Financial, and they're on review for potential downgrades. Now, these are the banks that helped try to bail out First Republic Bank with that initial $30 billion uninsured deposit. Looks like they probably lost a lot of their uninsured deposit. So this is a problem, right? And Moody's says there could be more bank runs to come. So this has people on edge. And Moody's also changed its outlook to negative for 11 major lenders, including Capital One, Citizens Financial, and Fifth Third Bancorp. These are major banks and lending corporations. You're saying Capital One has a problem? You're saying Fifth Third Bank has a problem? Citizens Financial has a problem? We have a problem, okay? So we're still coming off of that news, as well as the Fitch downgrade that happened last week. Not to mention, like I said, the Chinese economic data coming in really bad over the last 2 days. It is a big problem for the markets, and that's why the markets did drop today, mostly based off of this news from China, the Chinese economic data being so negative. Now, tomorrow you're going to have a big catalyst, and that is inflation. Now, the problem I see, and we've talked about this before, is the expectations are for no change month over month or year over year for core inflation year over year, headline inflation month over month, and core inflation month over month. You're expecting the same readings as we got last month, 0.2% for core month over month and headline month over month, and 4.8% for core year over year. There's a greater chance these numbers come in a little bit higher this month compared to last month, given what we have seen with specifically the price of energy, right? It looks like the housing market is also doing fine. And just in the last month or so, some areas of the U.S. have seen record home prices and really good demand. So these numbers could be far too low for the estimates, and this sets us up for maybe a little bit higher month-over-month readings, which would be very negative. Now, the main number markets tend to fixate on is your inflation rate year over year. You're expecting that at 3.3%. Last month's reading was 3%. I believe this will come in at 3.4%. I believe that would give you a 0.5% to 1% down move. If this number comes in higher than 3.5%, maybe 3.6%, or even 3.5%, you're probably in for 2 to 3% down move tomorrow. That would obviously affect the markets, and that would be a big deal. Now, the issue is the markets are not expecting the Fed to raise rates again. There's an 85% chance the Fed pause, 15% chance the Fed does raise rates. So if it turns out, hey, inflation's reaccelerating, especially if your month-over-month readings do go up, the markets are pretty dramatically going to price in a rate hike in September, more than likely. And given what we're seeing with the Moody's downgrade situation yesterday, economic data out of China, as well as Europe and Germany's economic data, which says, this article, Germany risks falling back into recession as car industry sputters. Industrial production fell 1.5%, driven by a 3.5% drop in Germany's vast automotive sector. Things are just not going good, right? Around the world, things are not going good. So if you see inflation reaccelerating and the Fed needs to raise rates again, that's going to be a big problem. Now, on top of that, we don't have a lot of economic data next week. You really don't have much at all. Tomorrow, you're also on Friday, you're also going to get PPI month over month, as well as Michigan consumer sentiment. But next week, you don't really have much. You have retail sales month over month. That comes out Tuesday. And I believe that is it for the whole next week. Building permits doesn't do much. The FOMC minutes will be exciting on Wednesday as well. Maybe, if we get new information. But there's not going to be a whole lot of economic data next week that could kind of walk back some of this inflation report. And unless retail sales are really strong, then that would make some sense why the markets would like that. So it's not like we have a big week of economic data tomorrow that's going to save the markets if inflation comes out bad tomorrow. If inflation is bad tomorrow, the markets are likely to continue to trend downwards. Now, the S&P 500 is fighting to go green today. The NASDAQ is only down 0.37%. It's been a very strong recovery so far on the day today with really broad participation across the board. So that is positive. But this is the first time you have came down and tested the 50-day moving average since briefly back here in March, right? You came down, touched that 50-day moving average, found support and bounced. Back here in January is the last time that you were around the 50-day moving average. And you broke out on January, I believe, 13th. January 20th. You broke out and really never went back to it besides briefly in March, like I said right there. So if you do fall under the 50-day moving average, you guys see what happens when you do fall under this, right? Right here. You fell, I don't even know. Do we even want to point it out? We fell about 16% upon the break of the 50-day moving average there. Upon the break of the 50-day moving average here, you fell about 6.5%, right? So if you don't find support here, if tomorrow is really bad and you do break under the 50-day moving average, you could fall anywhere from 5 to 10% lower. 5% lower on the NASDAQ would put it somewhere around 350. 10% lower would put it around 330, which would be a great reset. And if you're a bull, that should be encouraged to be able to buy stocks at more reasonable valuations. But that could mean a sharp downturn in the markets and would not be positive for stocks such as AMC. Now, what we have seen recently is on some of the days that AMC does the best, it's actually when the markets are doing the worst. So there has been discorrelation, so we'll ultimately see what happens. Now, if we look at the Ortex data, you got a short score of 93, about $800 million currently of short positions in AMC. Estimated short interest of free float continuing to go higher today at 30.41%. Free float out on loan at 38.37%. Shares out on loan 198 million. Days to cover 8.37. Cost to borrow fees 252% over the last 3 months, and utilization at 82.21%. If we take a look at the cost to borrow fees remaining steady on the day today, like 2,000 shares available to be lent out, virtually nothing. 244% cost to borrow fees. Cost to borrow average 356%, cost to borrow max 380%, cost to borrow minimum 8.6%. Earlier in the day today, it was around 200%, so keep that in mind. 157 million shares currently sold short and 30.5% short interest. This is the highest short interest you have seen in ever for AMC throughout this whole entire trade, so keep that in mind. That is quite bullish. As well as that, it's pretty bullish to see a positive order value of 19%. I remember the days we were seeing 90% call activity, right? 90% bullish activity. Well, now you're seeing 19% bullish activity. And this is higher than 4%. That is what we have seen for the week so far. So that is positive. 21 orders on the day, totaling $4.06 million. So definitely a slower day as far as some of the options are concerned. But the fact this is 19% is a little bit more encouraging. So there you have that. Again, if I have to point it out, AMC's charts are very positive, right? The charts do look really good. Even though you are kind of coming down over the past 2 days, you're still a lot higher than you were. After filling that gap down here at about $4.50 per share, that's going to be a solid level of support. And even if we have a bad day tomorrow, I wouldn't expect the stock to break under $4.50. Again, it's possible AMC could inverse the markets, and as the markets fall, AMC could actually rally as some of that collateral does start to get dried up. So let me know what you guys think about all of this down below in the comment section. Hit the like button and subscribe to the channel on your way out as well. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.